All right, the S&P. A little bit of everything today. Now, my focus was on the NASDAQ today, which is why, like, if you're in my group, you guys saw me. I bought SQQQ. I did also buy some QQQ puts later. Now, you guys know I swung calls overnight. So I was actually in SPY and QQQ calls overnight. And I thought we would actually get a gap and crap today. I thought we would gap up and then we would sell off. If you guys saw that clip in the morning, or you were on the stream last night, then you saw exactly what I was talking about and what I thought was going to pan out. But we kind of had the open here, and we were getting there. We were almost there, but we sold off right before the open, and we really just ripped this thing down, and that was fast. So here's kind of like our open, and then we sent it. I was like, I don't know. I added on to, not SPY, but the QQQ because it looks almost identical. I did add on to a couple calls there. They shot back up. I was like, done. I was waiting for this kind of green, and I thought this green would happen overnight. I thought we'd get the relief rally with, lesser volume. It's easier to push things around overnight. So I thought we'd get that and kind of be up there in the morning, and then I told you guys I was going to lock in those calls and go short. That just got delayed. And what I really wanted to do was wait for the selling to stop. We had a little hiccup here, pushed up here a little bit, but this time we're overbought. I guess just kind of ripped it right back down. Again, I babysat the Qs all day, so the conversation would be a little bit smoother there. Looking at this price action as a whole, this should concern people. So let's break it down from the top. Okay, meltdown. So we're selling off. I encourage everybody to watch the video that came out this morning. If you don't want to watch the whole live stream from yesterday, watch the cap. It's kind of like Joe Rogan does. You have the whole podcast, but then you have these little clips from it. The clip this morning is from last night's stream, where I break down characteristics and why these red candles are very different from the previous red candles, and why this should concern you that we're not getting the relief rally. Now, we did, in the midst of all this selling, so we're oversold. Things are getting nuts. If you're going to buy the dip, this is, I guess, high time to be buying the dip. If you're in the buy the dip crowd, then you love this area. They got nowhere. This right here is probably just more led by profit taking from people that were short. But this was the bear trap we got this morning. And I got to admit, if you're in my group, there was quite a few comments in there and people were direct messaging me and everything like, don't you mean bull trap? We are right here. I think right here. I was like, no. We trapped all the bears. We got them excited after all the selling off, and everybody thought, hey, we're probably going to bounce up. And then we just melted this thing down even further, breaking down some lows. There's a lot of traders will follow the overnight high and lows. When we break that, a lot of times we do just send it, and they got everybody on board. If you were bearish, you saw that, you thought today we're kicking in the nitrous. We're going in, and then they just ripped it right up on you guys. And then if you want to call it the bull trap, I think that's just profit taking, and then they loaded up back short. You can see we just went zone to zone right here for that quick little hiccup, sold back off into the close. As futures close, we opened up with a gap up, but I don't think it's enough. I think we get to that blue zone and sell off. So let's get to, as far as the S&P goes, we are outside the expected moves. We got outside, tried to rein it back in. We are back out again. And this is important, especially if you're following me on TikTok right now. The very important part about these expected moves is inside these two white lines right here. It's you and institutions. That's it. That's the playing field. That's that. Okay, when we get outside of here, now it's you, the institutions, and the market makers. You got three players on the field right now, 3 teams. Things are about to get nuts. Now, the thing is the market makers, they're coming in like the cavalry, okay? They're going to help out one person. It could be you, could be them. You don't know. Imagine playing football and the whole other B team, right, just gets to come out and play on the field. That's what's going to happen. More than likely, so I say this all the time, 80% chance we rein this thing back in. We're going to close the week right above here. 20% chance we full send, because at this point market makers are delta hedging and they're just cranking this thing down. Now, while I say 20% chance, you might think that's a small chance. That's a big 20, because they will do this quick, fast, and in a hurry. It doesn't have to go to this level, but if they start delta hedging, 0 days to expiration are certainly helping this out. We might really melt down, so watch out for that volatility. And this, I gotta say, is what does make 0 days to expiration enticing. Because if you're trading like some SPY 533 puts and you buy them tomorrow morning, they're gonna be nothing. They're gonna be pennies, and they're gonna end the day at if it were to just melt down all the. If you bought 533, we end at 531. That's a $200. That's a $2 play that you could have bought for pennies. So the risk to reward there, it is pretty sweet. It is a gamble, but this is like the one scenario where I would consider taking on those plays. It's not just a YOLO, but hey, this is on the table. It's a legitimate thing. Maybe I do take advantage of this. All right, so NASDAQ, this is the one I was babysitting. So we had popped up. I bought SQQQ somewhere around this little hiccup right here. This is also where, so I added on to the calls. Right around here is where I started covering things. Now, if you're in my group, then you guys know. So I bought SQQQ, added onto it at the blue zone. I even told you guys beforehand. You said, hey, are we selling off right here? Are we going to make it to the blue zone? I said, not sure, but that's where I'm adding on. So we did get to that. I did add on to SQQQ. Right before the end of the day, I did buy QQQ puts. They are up quite a bit. And I'm swinging those. There's no spreads, anything about it. Just puts themselves and SQQQ. But this was the bear trap. Break that zone, get the bears excited, and then just rip it up on them. And back to what I was going over on the S&P. Let's bring it back a little bit. This is what I was originally going to say when I was going over the S&P. Was we have all this selling off. Then we get the, if you want to call that a rip your face off rally, I'd say it checks a couple of the boxes. We bounce. We recover. Listen to that. We recovered. We bounced out of this yellow zone, full send up, and you thought sunshine and rainbows. We hit that zone, and in the absolute same day, okay, you just got done cleaning your lunch plate. We sold right back off, gave every bit of it back. Now, when we can't hold on to a single thing, this is price action. It doesn't matter the ticker. Okay, think of it characteristically. We bought it. Everybody's excited. Not a single person had that same conviction and held on to it. It's like, no, yeah, I got you. I'm right behind you. And then they just ghost you. They scatter like cockroaches, and they're gone. Tells you the confidence is zero. That tells you not a single buyer was actually buying to hold this, but they were probably buy-side activity from buying to close a short position, and then they just piled right back into this thing. So maybe, again, that's a bear trap. People love to float and throw around these terms out of nowhere, and the market is kind of just ever-changing. And so this is the one time. You guys know I like to poke fun at some other YouTubers. If I'm legitimately making fun of them, I will not ever say their name, just so you guys know. Gurus-wise, the internet has enough bad opinions. I don't typically like to add to it. I'll give my opinion, but I won't really name them. But I like to poke fun at a lot of other YouTubers. So if you ever hear me name them, I like to poke fun at Meet Kevin just because he's big. He's said some stuff that I just think is hilarious sometimes. But this market right now, regardless of the guru you watch, whether he's right or wrong, I wouldn't worry about it at all. I don't care if he called it to the T. I even had some pretty impressive moves today with these zones as far as my entry on SQQQ, adding that onto the T, buying puts. The volatility we're going to be in, if the guru you're watching is dead wrong on all of it or nails every one of them, I'd say the odds were about the same. This is the one time I would give that creator, I would take it with a grain of salt, because when you enter this kind of volatility, this kind of market participation, this is not retail. This isn't Wall Street bets jumping in here and buying some 0 days to expiration. This is institutions moving the market. You don't just move. This isn't some penny stock. Ross from Warrior Trading didn't just call out the NASDAQ and move it and then say he's going to go short and sell that thing off. So when you're going to play this game and the big boys are playing, they will love to make everybody look stupid. It's very hard to guess. So even take what I say with a grain of salt, regardless of my previous track record. And I'm talking like the last couple trades. You never know if the things you're doing to just get nuts or not. The cool thing is things probably will get nuts. So if it goes in your favor and you don't just paper hand that thing, it could be a decent trade. On the other side of that coin, it goes against you and you don't know what a stop loss is or risk management, you're about to get smoked. So be careful with all that. Do I think the CPI number tomorrow will get a Friday rally? Nah, I don't think so. And I'm judging that based off of this right here. This is the futures right here. And the index is QQQs. This is the NASDAQ. This is what your futures look like. QQQs over here. The fact that we gave all this up, I don't know if the letters, what I call them the letters, right? PPI, CPI, PCE, whatever they are, I don't think anything's going to do this. Price action wise, everybody knows CPI is tomorrow. Like, who cares? Let's pull it up. Let's refresh this thing. Everybody knows the letters are there tomorrow. Someone's going to talk. Whatever the news, there's jobless claims. Don't we have GDP? I thought we had one of them tomorrow. That's today. Hang on. So tomorrow. Okay, PCE is what we have tomorrow. Okay. We all know. Right? No one's jacking around. This rallied up and came right back down. The way they piled in like this, they are not holding on to jack, which only confirms what I was saying last night. I think we're going to get the continuation. The only thing I wanted to really warn last night, I even sent a couple of texts of, hey, don't buy this dip. Chill on that for a second because, yeah, we might get green, but we're coming right back down. Terry says gold futures are pumping. Let me just deviate real quick. Terry, gold futures are pumping. What do you want, the 30-second time frame? I'm just kidding. In the futures market, if you guys just trade stocks and you've never been on futures or anything, this, even though I'm super zoomed in, that's some money and some contracts right there. Overall, while we're on gold, I'm surprised. I'm actually surprised gold hasn't done better with. You know, sometimes when the market gets crazy, people like to buy the shiny stuff like raccoons, you know. There's been better situations. I'd say if gold breaks above this, we're probably going to check that zone, though. How do I get on the text list? You're in the Discord, man. December contracts. We switched? Okay. This is the continuous. All right, let's get back to the Russell. What an awkward day for the Russell. We're talking about the sky is falling. I sound like Chicken Little. Get your poncho on. You're in the splash zone. And the Russell bounces out of this zone, has a slight little pullback just to make a bull flag. Russell's holding on pretty well. Small cap, I'm actually surprised small cap is even holding on this well. Maybe Russell just didn't get the memo. Like, hey, this party started. We're selling things off. Russell was out of service, you know. Just he was on roaming, you know, LTE where it's crazy. Speaking of cell service, you guys ever remember guys when LTE was like awesome? Now you have LTE and nothing loads. What happened? Because he was on LTE and he didn't get the memo. We're supposed to sell everything. IWM just needs to stay under 126.40. IWM? You mean 226? Hopefully that means 226. 125. IWM, I hate to be the bearer of bad news, but it's 220, not 125. Thoughts on crypto? I wouldn't short it. It's something I don't really trade it. It's something I buy. I buy Bitcoin and Ethereum every week. I think crypto could. I think it's going to sell off with the rest of the NASDAQ market, but I think it also could be a surpriser. 1, 2, just numbers. If people are rotating into small cap, wouldn't it be bullish for the Russell? It would. And this is the argument I have towards market rotation. Look at how much this is up. Okay, here's let's just keep I'll go to the indices. IWM. Look how much that's up. We're talking about last few trading sessions right here. Now let's look at the QQQ. Absolutely melted down. We didn't rotate. They just pulled out of this. And someone was like, yeah, it's a market rotation. And like 3 people bought IWM. So that's the one thing that would concern me as far as talking about a market rotation is that we're just not seeing the outflows correlate with the inflows, if that makes sense.